Hello everyone, how's it going? In this video, we're going to talk about Mullen Automotive, trading under the ticker symbol MULN. Mullen has been a very exciting and interesting stock to cover, with a high volatility providing opportunities and many ongoing projects that might fuel the speculations in the months and years to come. At the same time, Mullen has been having a difficult time proving to the market that it is a serious company that can put investors' money into good use for the many years to come. So in this video, we're going to go through the latest fundamentals, the price actions, and my analysis, as well as recommendations to hopefully help you make the best decision possible. Before we begin today's topic, I'd just like to make a brief disclaimer. My videos covered my opinions on current events and what's likely going to happen in the future. They're not investment advice and should be watched for entertainment purposes. No one will predict the future with certainty, just our best guess of what might happen based on what we have on hand. My videos are prepared either immediately before the uploading or a few days before they were released on YouTube. Some of them may no longer correspond to the latest price action, but nevertheless, they would still be relevant to analyze the subsequent price tendencies and the improvement of your decision making. Also, these videos aim to cover the securities as broadly as possible by covering the fundamental and technical aspects. Other than the price action and latest news events, the long-term tendencies, shareholder composition, fundamentals, and other market behaviors were also going to be covered because they all affect our decision about if we should buy a security, how many shares we should buy, and whether it should be bought at the current price level. So with all that being said, let's get into today's topic. Mullen operates in the EV manufacturing, distribution, and marketing segment. It acts as a holding for several brands and companies they have bought over the years, the latest one being Electric Last Mile Service, ELMS. The company first began operating around 2014 as a successor to Coda Automotive. Another previous venture was called Mullen Motorcars. So overall, we can say that Mullen has been around for some time and that they have the intention to stay around for, yet like the foreseeable future. But the question is whether they have the means to really stay in the game, because the sector has been known to be highly capital intensive and it relies on other industries that might also, to be yet fully mature in their functioning and development. There are also the long-term challenges of keeping the valuation multiplier as high as possible to avoid being classified in the same boat with other industrial manufacturers. Other source of distrust includes the CEO's own track records. So his track record suggests that he's more like a hustler than an inventor or a genuine entrepreneur. And also, the control of his company belongs to him and some of his associates with, a past that can sometimes be contested. Of course, these are speculations for the time being, but I still believe that when there's smoke, there is at least some little bit of fire. For more details, you can look up Hindenburg Research and its opinions on Mullen. Again, it doesn't mean that whatever they say is true, but they should at least be considered as an additional element in your decision-making process. So recently, the price of Mullen made an attempt to go above 20 cents and succeeded doing so for a while. It is currently trading around 23 cents with a recent peak around 35 cents. Despite the eventual pullback, this attempt to reach higher levels is very encouraging because it confirms that people are still interested in pitching in when they see some upward momentum. The pullback is probably caused by those who are overexposed, so they want to cash out to reduce their risks whenever they can, and not necessarily because the company's specific fundamentals. My assessment on the short-term performance is that there will be some need to have more confirmations from the bulls to see a clarification in the weeks and months to come. So in terms of long-term price actions, it's certainly not a mystery to say that time has been not so kind to Mullen over the past few years. The stock has been trading between $5 to $10 for many years before peaking at about like $15 before falling to around the penny stock levels in the recent month. What this tells us is that Mullen has been hard hit by the ongoing stock market downfall and that its own fundamental weaknesses don't really help their case. This assessment, was attempted to be modified by the CEO. It hasn't really convinced many people in the long run. To a point, it kind of still explains why Mullen is a stock that I would recommend to trade instead of investing in, regardless of the recent distribution contract or the short squeeze. The interest surrounding Mullen is the expectation to scalp a quick gain in a matter of weeks or even days from a short squeeze, not necessarily from yielding dividends in car sales in a matter of like years or decades, or if ever. So with that being said, I want to add that things can always change. So when I said it's better to trade, not invest, it doesn't mean that this company can never have any sort of investment money and any long-term trust. Like things can change a few months from now, a few years from now, or we cannot say. The sector itself is still in development, and a lot of noise has to be heard and, dispersed, if you will, before things can really settle down. Now, regarding the opinion from the online communities, I have to say that there's not a whole lot, but for a company that is now in its penny stock levels, it's certainly one of the more active communities that I have seen. So people are, generally speaking, split into two teams. Number one, they're trying to find any sort of good news. They're trying to look for the positivity, if you will, in any sort of scrap of news that they can get a hold of. For the most part, they don't really have an effect or any sort of significant effect. Now, with that being said, it doesn't mean that nothing is provided. Like, I personally believe that what Mullen needs to do is to prove to the shareholders that they have the capacity to eventually make a buck, which is not the case for the time being. So whenever they say that they're going to distribute iGo cars, they're going to sell things to Fortune 500s, that they're going to supply EV cars to the military, this gives hope to people, but very often those promises or those announcements tend to be quite empty, at least for the time being. Okay, so this is why I think that Mullen is having whatever reputation that they're having online, but most people are here for the short squeeze. So this is why, regarding the company's own fundamentals, not that many people have good things to say about it, and more importantly, not that many people care. On top of that, the macroeconomic trends within the sector have been under significant pressure for several reasons, including the increase of the interest rates, the capital flight from other sectors, or rather to other sectors, the conflicts around the world, the supply chain issues, and the expectation that there's going to be a recession in the world, only delayed. So another factor to look at is how's Tesla doing. And if Tesla is doing well, pretty much the entire EV sector would be doing well. If it's not, then that's going to cast a very, very long shadow. Of course, Mullen doesn't always follow the trends, but that's not necessarily good news, because whenever the market's falling like 20%, they might be falling for like 90%, okay, and vice versa. But we should be mindful that those issues are going to paint a picture for the surrounding environment for sure. Now, with that being said, let's also take a look at Mullen's financials. The company's cash balance has decreased somewhat. For now, it looks like they're going to need some additional rounds of dilutions in the month to come. Maybe even shorter than that, for the simple reason that they're not really yielding any significant profit. In fact, according to the financial statements, they're not having any operating revenue. So this is why they're going to keep digging themselves into a hole as long as that issue is not resolved. the fact that this company tries to hype up their projects from time to time also don't necessarily help, but that's like another story. I think that the lack of profitability remains one of the biggest issues. The other element to look at would be the liabilities. They have claimed that they have reduced their liabilities by, I think, $13 million. Did it really help their case? It helped mine. Like, I think that the company is in better shape now than it was before they got rid of the $13 million. With that being said, we should also point out that the market doesn't really seem to care about this debt removal. So this either means that the fundamentals don't mean that much. So once again, maybe it doesn't mean that much. And the other thing is, maybe because most people believe that this doesn't hide the fact that they're going to keep digging, they're going to keep eating like their cash reserves, and the fact that they have reduced their debt is not going to remove the probability of further dilution rounds. So because of this, Mullen's shares will be under constant threats of diluting to ever lower levels before getting either delisted on the Nasdaq or getting a reverse stock split, which doesn't really help the stock price either. Now, overall, I would say that the shareholders are certainly mostly retail, and this is good for trading the stock, but it's not necessarily good for like investing in the company. The company itself currently looks like a less successful version of Ideanomics, so they're here to give you some ideas of what they want to trade, what they think is fashionable at the moment, and this is what they want to give you as generally speaking, as a reason to buy their shares. And I know that BlackRock increased their holdings in Mullen recently, but these don't necessarily make my assessment any different. I think that Mullen is a stock that you can hold either for YOLO or because you think that the short squeeze is going to happen at some point. So with that being said, let's also talk about the short squeeze. On paper, Mullen has a huge short squeeze potential. Doesn't mean that it has that for real. Well, I mean, I've seen a lot of shares with a lot of the stars aligned, but even when they're aligned, it doesn't really how can I put it? It doesn't really mean that they're gonna occur with certainty. So this is why I think that we should consider this possibility going in. And yes, I personally own a few shares of Mullen. It doesn't mean that this is my main position, very far from it. But at the same time, I do consider this probability to be significant. So this is why, till this day, despite the fact that I've lost maybe 50 to 60% of my position, I would still keep the entirety of it because I can afford to wait. Now, my recommendation for Mullen is that given the current price action as well as the particular profile of Mullen, I would recommend to keep building a position into the company or to resume the purchases and leave enough room for subsequent sell-offs if they were to happen. Like, let's say they go back to near 20 cents once again, that might be a good time. This would also be a good moment to remember the importance of controlling the exposure that you have in any stock, but in Mullen in particular, as the fundamentals remain weak and can't necessarily support the long-term price action. Now, the exposure that I would recommend would be between 0.5 and 1% of your portfolio.